Hey guys, Blackwatch here. I did not do any of my end of day markups, so yeah, we're gonna do that tonight because I fell behind this week. Just too busy. Sometimes it happens, but it's definitely important to keep doing it. Doesn't matter how consistent you are, doesn't matter how experienced you are. End of day markups is always important. Back testing is one of those things where maybe not so as important as you go on. Obviously, you want to keep your edge sharp and that kind of thing, but you know, when you're trading consistently, you're typically taking the same trade over and over again, so it's a little less relevant once you get a little bit more experience. But end of day markups is definitely up there on some of the most important things you can do to remain consistent and keep your edge sharp, because some weeks you don't really trade at all, you know, and that's not for the fact that there wasn't any setups, but maybe it wasn't during your trading session, or you just weren't available for it. But it is good to go and assess each day and see what's in your plan, and you know what's in your session timing, and what was available outside of your session time, whatever. But yeah, so we'll go through it, and typically I would just mark up New York, but I will basically kind of mark up any available entries from Monday to Friday. It's going to be all in hindsight, again, just doing end of day markups, and we'll log it into the Notion journaling template as well, and just kind of, yeah, just go from there. But yeah, let's go ahead and start on Monday's PA, and I'm gonna go ahead, this is the 15-minute for now. I'm just gonna go and mark where my Monday kind of starts, which is just this. Whoop, big circle. All right. And this just while I'm down in the depths of the 1 minute, whatever, just kind of helps me just keep things in check and make sure I'm not like outside of the bounds or whatever. But it's kind of whatever. Probably make this a little bit smaller. All right, so first things first, what we need to do is we need to go out to the 4 hour, and let's check the daily actually. All right, good. We can still see the circle. So yeah, so I mean, generally speaking, we know that we're in a pretty bearish trend, right? We've got this, it's been going on since essentially, what was this, May, right? So it's been 319, 20-ish days, somewhere around there, right? So we've been in a pretty serious downtrend ever since we more or less just swept this high right here, and this has been like tanking ever since. Now I'm pretty sure, yeah, we have a weekly supply zone here, which again, I'm not going to go too heavy into the weekly stuff. What I want to do is I want to focus more on what's going on here. So we know that we recently had this daily setup for our entry model, which again, our entry model is essentially if you're in a bearish trend and you get a demand reaction, the expectational order flow is for lower prices, but sometimes we get a reaction to the demand before that fails. That reaction itself is our flip zone, right? Sometimes it goes and it sweeps liquidity. Sometimes it just pulls down and then it comes back and it gets swept and then it trades lower, right? So in this case here, we had that high getting taken, and then this was all part of a supply chain. So we had liquidity swept prior, whatever, just assume so. And then this ended up being our flip zone here, and then price traded lower, right? Which is kind of what happened here. We pulled back, remained bearish, right? Expectational order flow is still for lower prices, tapped into supply, and then of course now we're kind of here. So I'll just mark this up real fast. Right there, that's liquidity. Supply. And don't mind me while I kind of go silent sometimes to kind of do this. I'm not obviously normally talking while I do my markups, but this tapped into, oh yeah, this was the flip zone. So this was demand. This was our supply, which gave us this much larger push to the downside. Gave us a nice kind of 20-day bearish trend. A lot of continuations in here. I have entry from here, here, and I think actually up here. I have to double check, but I've got 3 entries right now. Actually, yeah, I gotta double check. They all might be in this here. Actually, one here, one here, one here. I can't remember, but essentially I've got 3 swing positions open, starting at the top of this into this leg here. We've just taken out this low just today, and we're starting to get that deep pullback back. So what I have here is I have demand, right? Demand has failed. This was our initial reaction to that demand. Oh, that's too small. Right, that was our initial reaction to the demand. Now, if we're talking about our potential model, what we do have here is we do have a potential sweep of liquidity right there. But this being the reaction to demand, it is also possible that this will get swept. That's kind of like my analysis for the next coming weeks, is that price may travel up into the supply zone right here and then travel lower. So keep an eye on it. But essentially what I'm looking for is this bearish continuation and to kind of fill the rest of this internal range liquidity. If you don't know what internal range liquidity is yet, there are videos on it. Brad Wise did a very good video on internal and external range liquidity. Essentially, it's the concept of all these demand zones within this. There's much more than what I'm marking. But the idea is that when price comes into them, once price has already turned bearish, is that they will only lead to pullbacks, right? And the idea is that this whole area here is just a big liquidity void, and that price will come and fill it. And you can see the fractal nature of it here, right? So clean this up, right? You've got it there, you've got it here, you've got it there, you've got it there, you've got it here as well, you've got it right there as well. And chances are price will pull up and make a new void, and it'll come fill that as well, right? It's fractal. It happens on every time frame. It happens any which way you're going, right? You can see it even on the inverse, right? Here a little bit, and then potentially here, just potentially here, right? Counter trend's always a little bit difficult because sometimes price makes it up to it, sometimes it doesn't. Anyways, so yeah, so let's go in and get into today. I'm gonna clear this because that's more of an analysis for the, oh shit, I need that, sorry. That's more of an analysis for the upcoming weeks rather than this week's end-of-day markup. So all right, so we know from our daily perspective, this is our Monday. So what we have is essentially we had price take out this low, right, which ended up breaking that structure to the downside, which confirms our bearish momentum. We have this, I believe, is a weekly supply zone, right? And it's just the length of this here, or we can double check. Okay, so it's actually more just that. It's fine, whatever. That's our reaction. This is our demand for it. And then we've essentially had price playing into this demand right here. This is why we got that large reaction to the upside, right? So, yeah. Right, so what I can do is I can take this and I can screenshot the weekly and put it into my charts. I don't have a section from our weekly, so I'm not even gonna bother. But if you do, go for it. Daily, this came into the extreme here, not quite, but that is definitely something that price will probably want to come into at some point. That's more of a reaction to this as it's on the daily. All right, fine. All right, so what I want to do here is I essentially want to mark this up, right? Because I just want to figure out why price stopped here, and it looks like it just came off the range. So in terms of the daily screenshot for my markups, this is pretty much what I'm looking at. So I'm going to take this, I'm going to copy the chart image itself, and what we'll do is I will drag this over so you can just see it. I'm going to go to Monday. All right, time for markups daily. I'm going to drag that in and put that in there. Now what I'll also do is I'll take the copy link to chart image, put that, I'll just click caption and I'll throw this here. So that way I have something that I can refer back to when I look back at this. So that's it. If you want to add a comment, you can add a comment. I'm just going to leave it as this for now, right? So who's in control? Supply. So here, oh, sorry, we'll go back to this. And now we need to get our 4 hour. So go to the 4 hour, right? And I'm only going to do the higher time frame, probably. Well, it depends on what happens on the 4 hour here, but I'll probably just do the daily for the Monday one, and then for the rest, I'll probably just focus on probably 15-minute stuff, depending on what 4 hours doing. There wasn't much of a significant 4 hour kind of POI movement selection, whatever. It was all pretty much just the giant supply chain into these wicks. These wicks were not exactly ideal, but it's all right. So again, we had a price push into this. We did push to the upside a couple times on the 4 hour, and then we of course just broke to the downside. So we had this. Well, actually, it's not a window of imbalance, but it looks like price was reacting to this range. All right, and then price. I see what happened. Okay, so we have supply right here. I'm just gonna leave that for a second. We had supply, and we had this reaction to that supply. So I wanted to see what was happening here. This reaction, why did price stop there? Looks like it came into these buy sell wicks based on this little supply reaction right here. Excuse me. And then that got swept, and that was the beginning of our supply chain here, right? So we had this. This all kind of mitigated itself within that. We had this supply right there. And then we have this supply. And we'll just cover the wick because it looks just to whatever. I'll cover that as well. Right. And this is kind of where our week started. So we had this, and then we had all this starting to break to the downside, right? So this was our indication on the 4 hour that price was going to trade lower. So when we were trading for this week, shorts were pro trend, right? So let's see, do we need anything else for the 4 hour? Seeing as how all this demand is just, again, internal range liquidity, right? It's essentially just all these demand zones are just catalysts for pullback. So when price pulls into it, we should only get a pullback, not necessarily a complete structure shift, right, into bullish momentum. So again, I'm going a little quick, but I do want to save some time on the video. And when I do my own end of day markups, they're not overly detailed. I don't like annotate. I don't do anything like that. It's just because I already know what I'm looking for, right? Everything's just a pattern. It's just visual for me. If you're still learning and it helps you to be overly detailed and get those annotations in because you refer back to them, or potentially just the fact that writing them out and getting your thoughts out of your head and onto the charts, doing that can be a massive help to you. And it's obviously something that most people do early on and as they learn. But once you kind of gotten to that point where you feel pretty confident with it, you don't necessarily need to do that. So that's kind of obviously where I'm at. So, you know, if you feel the need to pause and annotate, highly recommend you do. But yeah, so for the 4 hour, this is kind of what we're looking at. We had a little bit of like a flip situation here where we had this supply and that was our reaction. This ended up being our demand. This is kind of what price was reacting off of in here. I'm just going to label this as a catalyst for pullback because again, this was a weak low. This shouldn't have necessarily held. This just ended up getting used as liquidity. Like if we look at this, so just a little bit of the demand in there, right? And then because this didn't sweep anything, it ended up getting swept, right? So again, there's probably more to it than this, but this is generally how I'm looking at the 4 hour for this week. This 4 hour actually didn't get tapped into, so it looks like it tapped into more of a daily thing. So we'll have to look at this on lower time frame. But for my 4 hour, I'm happy with that. So I'm going to copy the chart image, go right here, 4 hour, paste that in, and get the link again and do the same thing. I'll just do it off the screen, but you get the idea. All right, caption, paste the link, and then now we want the 15-minute. All right, so cool. So we'll go to Monday. All right, kind of look at what's going on. What did we miss? What was possible? This is where things really start to come together in terms of your entries. So all I'm doing is marking up my 15-minute POIs, extremes, preferably parts of chains, demand or supply, whichever way. I know from the 4-hour, I am favoring shorts. However, from an intraday perspective, if you've got 15-minute bullish momentum coming off of something like this, you typically want to stick with that. You want to trade with that. Now, it looks like what happened here on Monday is that we kind of had a basically just sideways price action. I'm sure there's entries in here, but we need to figure out what is best to trade from. So, all right, what I want to do is I want to figure out why did the London high, actually this is Frankfurt, why did the Frankfurt high stop at this level right here, right? Now, to me, it's fairly obvious, right? We've got a supply zone, and that barely tapped into that. So again, just marking that up. I'm going to turn this into my lighter supply zone so it's not so distracting. All right, okay, cool. So we'll look at this to see if there's an entry from there. Understanding that this was relatively bearish, we could have expected lower prices from it. And then obviously, again, some major points of liquidity being the Asia low, something we want to watch for, right? Any previous session highs or lows are going to be big liquidity points, and you just want to use caution when price approaches them, especially again on a Monday, because one of the things we have to keep in mind on a Monday, right, with GU at least, and I don't have data on other pairs to back that theory up, but Mondays are typically rangy, and that's exactly what we see here. Tuesday, Wednesday, Thursday, we tend to see the trend start to form. And then Friday, we get somewhat potential reversal. And then, yeah, sometimes Thursday fakes the reversal. But anyways, I do a whole video on the GU pair characteristics. Take a look at that. Tuesday likes to reset Monday's high or low and then start the trend. So it's very obvious that we already have that situation happening here. So supply, again, we know that's happening. We have extreme demand kind of down here, which it does already get tapped into once, right? But we know that we don't sweep any liquidity here, so we understand that this may be used as inducement, right? Which actually doesn't get used as inducement until way later. So we'll just mark that as such. Yeah, that's fine, right? So actually this wick I use as inducement, that's what happened here. All right, so again, from this, we have essentially price within the middle of this range, this high and this low. Now, one thing you can do is if you want to, you can mark out the range EQ, right? So high to low, looking at the EQ here. Now, one thing that you're going to need to keep in mind is that on rangy days where price is between a high and low, liquidity will be built at EQ. That's just how it's always been. This is how I used to trade before Phantom, is understanding that when you're looking at equilibrium theories, you have a range. When price is in the middle, that's where people lose their money. That's where people lose shirts. Because what you notice is that how price plays with the EQ of the range, right? It presses up into it, pulls away, doesn't trade lower, pushes up into it again, barely trades higher, right? And then eventually after it taps into demand, we've got a bit of a demand chain here. Price does trade higher, hits the supply, pushes down. It fails to then break the low, right? And you can just look at how price plays with the EQ, right? Holds here, holds here, holds here, plays with this here, plays with this again. It looks like it's going to go up. Instead, it comes down. And then this here, right? And then you can see it even wicks into here. Be really cautious when you're trading ranges. Make sure you trade from the extreme only. So what we're going to do is we're basically going to focus on that. If we want to look at the demand reactions here and understand that price may want to trade higher, we can look for continuations, but we're not necessarily going to look for a reversal at the EQ or anything like that, right? We're going to take what the market gives us and just be aware that price is probably going to mess with us a little bit. All right, so we have supply, we have demand. As we go through this, I'm not going to go super detailed as I am now. We're just going to mark it up for Tuesday, Wednesday, Thursday, Friday. But for this first one, I'll kind of give you that thought process. Again, so we had price take some of these lows, but it just held this demand here. Definitely have a bit of a demand chain here. Again, this one pushed up. It doesn't take any liquidity. Ends up getting swept right here. But it's still within this demand. So we're just going to mark it up as such. Right. This is part of this demand chain here. Now you can use this whole candle if you want to. It's just not necessary. The reason I use just the body is because price stops here, right? It goes up. It doesn't quite stop in the wick. So I just refined it to that because that's all it is. It's just the fact that price came here and then stopped and went up. I can just use that body, right? Here was our indication that price wanted to trade higher, right? So we had that. We have this. People always ask, TRL, it doesn't really mean anything. Trendline liquidity, but I just use it just because it's a dashed line. That's literally it. It's not the fact that it's trendline liquidity. I just use it for the dash line. All right, so right, I don't need this quite yet. And yeah, so at this point, from an intraday perspective, we had a supply reaction here, so we can look for an entry there. And then we had demand reactions here. And then, yeah, price pushed up very, very slowly. So from an intraday, end of day markup situation for the 15-minute, this isn't the most comprehensive or complete thing, but I'm happy with this. So I'm just going to go like that for now, just for the sake of the video. I'm going to paste it into the 15-minute chart. And then I'm going to caption that again. Now next is our entries, right? And again, this is pretty much how it's looking for me, right? Just at my higher time frame, at my mid time frame, I'm gonna go into my lower time frame, and I'm gonna get my M1 charts. It's possible that I have multiple, so I might add another one here, or what you can do is you can just click this and you can just duplicate, right? So whatever you want. And then any additional comments. Monday, so far what I know is Monday, typical rangy PA for GU, right? Whatever. All right, let's go down to the 1 minute and see what we get. I'm just gonna bar replay from the end of the day. All right. Cool. So again, we know in the back of our heads it's Monday. We understand that price action is typically pretty rangy. We have our 15-minute zone. We have a reaction here. What we need to do is we need to essentially find any possible entries that are within our session, right? If you trade Frankfurt Open or London Open, whatever it is, just make sure it fits your session. One thing that I like to use again is the Phantom My Session Range Indicator. It's something that we just put out recently. If you haven't seen it, check it out. You can just go to indicators and search for Phantom My Session Range by this dude, Dorkstorm, that's me. And yeah, it kind of helps me highlight what my session is. So that way when I'm in it, I know where it is. The cool thing about it is if you actually are in a session and you go here and you turn on the lines, right? You can turn off this top bar if you want. You can see the end of the session, right? There's a visual indicator here. So it's kind of nice for that. But for now, I'll leave it off because it's not necessary. Okay, so what I'm gonna do, I gotta back out, I gotta reset this chart. Yeah, close that. And bar replay just to the end of this day. Go to the 1 minute. All right. So we have our 15-minute area right here. Now, the first thing I want to know is, okay, we hit demand, we hit supply, we got a nice reaction. I need to know where my demand is failing and where my entry is going to be. So right now, my main demand is this guy right here. My failure is right here, right? So you can either mark the low or you can mark the demand. This is our initial reaction, right? This is what I'm interested in most. That initial reaction, price pushes up and it pushes right back down. It takes out this low right here. So this to me is an indication that price actually wants to trade lower. We consider it a sweep. We can consider it a break of demand because this is technically demand, whatever you want, right? And what we have now is we have a bit of a supply chain forming. So the fact that this low went here gives me indication that this might be tradable, but I do want to see this low fail first to make sure that I'm on the right side of the market. So I'm gonna wait for that to fail and then we're gonna go from there. Now, while this was a potential aggressive entry, It's not necessarily something that I'll trade, but I will mark up the supply. I'll mark up my fib, which is an indication that it was a possible entry. And then this will become something that I am aware of in my charts, that it's a possible entry, but it doesn't quite fit my plan. Now, what you could do in theory is you could say, that's my supply. Here's my demand, right? It's my demand because this candle here reacts to the supply. It also takes out the low of this candle, and this candle right here stops right there. Why does it stop there? It's reacting to this demand. Price pushes up, price pushes down, this demand fails. This here is liquidity. This demand reaction doesn't sweep anything. It's a flip. There's no liquidity in the flip itself. You expect it to get swept, and then you can trade from the extreme, which in this case would be the top 50% or the premium of this candle here. So there's another possible entry within this. Again, whether I would trade that live or not, I don't know, probably not. So I'm looking at this right now. I want this to fail. Right, so what we have now is we have price take out this demand and it's pushing up again, right? We get that pullback. So now I know for pretty certain that this supply is going to hold and it's going to essentially trade lower. So what I want to do is I want to look for that entry. So again, what do I look for? I look for demand reactions. Now I'm just going to get rid of that circle. So you can see his price pushed down and pushed up, and then it reacted right here. It's not the cleanest. Again, I would typically like more of a higher candle formation, kind of like this, kind of like what we see here, and then price actually react to it and then push up and then trade through it there. But instead what we get is we get a very quick, subtle reaction, and then price trades higher, right? Now it doesn't tap into anything in here, right? This is just imbalance, which means that this is actually trading from this range, right? That's what this means. If price stops right here into this imbalance, it's not because it's trading off of imbalance, it's because it's trading off of this range, right? This candle right here to this low, this high, that's the range. So now we have a reaction to supply. We have that reaction to demand, albeit not great. And then we have the push to the downside. Now the cool thing about this is that it builds liquidity. You can see that this pushes up. It doesn't take any liquidity until about here, but this doesn't end up taking the low, right? So what ends up happening is price pulls up into this and we get an entry right there. Now again, whether or not that's something that you would actually trade or not is debatable. I'm gonna put this on just for the sake of the video and getting a markup, 3, right? And again, what I would do from here is go to the 15-minute, determine what my 15-minute POI is. I know that's here. And then I would look to say, all right, well, here's Asia low. So what I'd want to do is I'd want to at least partial here, right? And you can annotate or you don't have to annotate, whatever. And then you full TP here, right? So that's one entry. If I can squeeze any more into here, I will. And then, yeah, I mean, this is generally the idea, right? And then if you want to, when you're doing it yourself, it's probably good to speak out loud, just as I'm doing now, and it'll help you learn. So, you know, it might be worth doing. It doesn't have to sound great or have to be completely accurate. It's more about just doing it and then kind of growing over time and getting better with it. All right, so what do we have next? Do we have any possible entries? So we had this demand here, right? It's the low of this leg. Oh, of course, sorry. I want to also put my break-even level. That's my break-even level, right? This is the low that caused the pullback into the entry and then went from there. Now, again, this reaction right here, I'm not thrilled with. So, you know, just keep that in mind. It's just, it's kind of whatever. It's a so-so entry, but it's an entry nonetheless. Right, I'm fairly confident that price wants to trade lower at this point due to the reaction in the supply control and the demand failures. So, you know, something like this, even though it's like, it fits the plan, it's just not like a plus setup kind of thing. You know, it's something that you might want to, it's worth the risk potentially. So here we have this demand, right? It's the low of this. You can see that this is the initial reaction to it, right? I always like to mark up the initial reaction because it reminds me, if there's multiple reactions, which one am I trying to focus on the most, right? Typically, I want to see how price reacts to the initial reaction. So we get this, and then this all gets swept, right? Sweep, right? So that's our initial reaction. It doesn't sweep any liquidity, so it gets swept. And then as price starts to trade away from the area, it comes back and it trades into this here. Now, ideally what we would see is we would see price take out this low and then pop back up. However, that's not necessary because we had this demand failure right here and price is just more or less trading within this range. And again, if you look at the high and low, right, where's the liquidity built? Where does price wick and mess around? The EQ, right here, EQ, right here, EQ, pulls down, pulls back up, drops back down, taps back into EQ, messes around, pulls up. Instead of going up to the high, it just pulls away again, right? So, and then again, testing the EQ. So you get the idea, right? Stay away from the middle. Do not diddle in the middle. Stick to the extremes, right? Sometimes a flip will be somewhere near this. Just make sure if you're shorting, you're on the premium, right? All right, so here, what I want to do is I want to essentially look at this, right? So we had this reaction. There's a bit of this as well. I'm trying to justify this. Why did price come down here, stop, and then push up? And it looks like what it came into is these buy to sell wicks right there. Right, and then they eventually failed. This is in relation to this little supply right here. It's not so much that we want to trade from it. We just want to justify these things. We want to understand why did price do this? Because again, what we have here is we have a sweep of this flip right here. So this POI is valid for that reason. This demand fails, price trades lower, right? This wick here is ideal. I would trade from this, potentially this, but I would end up covering this high anyway, so it kind of doesn't matter, right? And there is another potential entry for us. Now, again, a lot of these entries are not exactly the sexiest or the most ideal. As long as we've broken even, right, I can scale in, I'm happy to do so. So here again, where's my break-even level? It's this guy, the lowest point of that pullback. All right, cool. So what I'm going to do is I'm going to screenshot this. I'm going to double this up because I would partial here at Asia low again. You don't have to be anal like me, but I can't help it. All right. Hmm, 15 minutes. All right, cool. So copy that. And that's in there. All right, cool. I suspect we will see more. All right, so that's 10R, that's 11R, right? We're doing pretty well so far. All right, so now we know we hit the 15-minute demand that we marked up earlier, because again, all we're focusing is on the higher time frame stuff. I am going to just kind of do this somewhat quickly. So here's just, again, this is tricky, right? We hit the demand and there's no real supply within this, right? It just kind of goes and goes and goes. One thing we can try to do is we can more or less say like, all right, look, there's a little buy to sell wicks here. The only reason I'm looking specifically at this is because it is a reaction to this extreme demand. It's not even though. See, it doesn't quite tap it. It looks like it taps into more of this here. So it's kind of hard to justify longing from this. But there is bullish intention. We know that we're in the 15-minute demand. We can go back and look at it real quick, right? Let me get rid of these. All right, we understand that we have some bullish. Actually, no, that's not after. That's not quite until after, right? We just know that we've had this bullish intention. So, right, so we need confirmation essentially, right? That's not something we want to trade from completely. We're just gonna wait, right? We're just gonna wait. I knew I wanted to short, and I don't really necessarily know that I want to long yet, right? I have this. I really want to see this first. Right, because we have this huge bullish leg or bearish leg right here, and then we get this bullish momentum where it starts to trickle higher, but it doesn't necessarily mean anything. We have this range for supply. You can see that price started to react to it, and it kept failing to take the low. So one indication I wanted to trade higher, but we don't really get that confirmation until we get this massive push up. All right, so what we need to do is we need to essentially say, all right, that took that low, this took this high. I want this supply, right? That's our initial reaction to that supply, right? This, again, reaction right here, inside bar. This is a sweep of this low. It's also part of the demand chain, right? There's the 15-minute POI. It's just this range, right? We have a window of imbalance right there. This does make it all the way to this 1 minute, so we'll just mark that up as such. I'm gonna drop the opacity on this. Right, so that's our reaction. This is here. Now, one thing we have to keep in mind is we do have this stupid window of imbalance right about there. I think we actually managed to tap the demand zone, so that's good. All right, so we have this demand here. Now what you can see is that it doesn't quite tap into this extreme point. It taps into this, which is more of the range. So, you know, it could be tricky if you're looking at it, but it is part of the 15-minute POI. So that's kind of what we're happy to see, I guess. Actually, price comes into it all the way over here, the extreme. So we'll have to mark that up after. All right, so essentially with this, right, this is, again, a little tricky. We're looking for some reason to trade it long. Right now what we have is we have supply reaction. That's tapping into that. And then we don't really get much, right? We have a lot of catalyst for pullbacks within this. All right. Not quite there. That's a reaction to that. This is a reaction to these wicks here. All right. And then go figure, the window of imbalance. No, not even, not quite. All right, so we'll just leave that there. This is basically just a demand chain here. We get that initial reaction to this supply. Demand. Again, not the cleanest PA. You don't have to force it. Right? Again, I can justify that. It's whatever. I wouldn't necessarily take this trade. Maybe I would, but it's kind of hard to say, to be honest. Potential entry here. I would have liked something a little bit lower off this initial reaction, but whatever. All right, cool. So again, fine. It's kind of whatever. So we took out this high. We're going to 15 again. This is why you want to do this every day. You don't want to have to do a week's worth. It takes a while. Well, honestly, it wouldn't take this long if I wasn't explaining it. But the point is, you don't want to be doing this every week. All right, so we have demand. It's getting a little messy, but we have demand. This is our reaction to that demand. This is our supply here. All right, that's why we get this reaction there. So 1 minute. Okay, cool. So, all right, longs, we did have nice demand chains. There was a lot of opportunity to take longs. However, they were short-lived, and just generally speaking, it's not ideal price action. What I would have liked to see again is more of the same, just an actual reaction to supply, not just failures. So we get that. This one just fails. That just fails. Yeah, so not great. So what we have here now is we have basically that 15-minute flip zone. Price trades into it. We have a little bit of demand right here. And then this actually drops that low. That's a reaction. We get a bit of a supply chain within these wicks here. Really large piece of demand. All right, that's a reaction to it. Price trades above it. And then again, yeah, so we basically have just a bunch of wicks kind of chaining into each other. So at this point, right, we get a good indication that demand is no longer in control after hitting that flip zone, and then price trades right back into our demand reaction. So we have this one, right, which is the start of the supply chain. We have this one here, which is this reaction here, which again is part of the supply chain. And then we have this inside bar, right? So what we can do is we can take this, and this is a potential entry, right? And we can trade this. Might be a big stop though. get away with 4. 4 is not terrible. All right, we got 15-minute demand down here. We know that. We'll have to go double check that. And then our break-even level is down here, which is a little bit far away. So more than likely what I would do is 1 to 4. Actually, this whole thing is 1 to 5. I don't know if this is worth the risk, honestly. But what we can do is say, we can do one of two things. We can take 20-25% off at 1 to 4, or we can look for an additional setup. So what we would do is we'd look at the demand right there. That sweeps right here. At the time, this looks like it would have been a good POI. Price doesn't come back for it. As soon as this low breaks right here, right, then we can break this trade even, right? So we can get rid of that, and we're breaking this one even here, right? Because again, the idea is the order flow shifted, and this would be fulfilling that other role. So we break this even, if price trades back into here, we take it, and then we go from there. So 5.2R on this one, not the best. If you trade at the EQ, you'd be good, but yeah, hard to say if you would or wouldn't. And then no scalings. All right, cool. So we have the extreme, right? We have this 15-minute or this 1 minute extreme part of this demand chain here. We know that we took out the 15-minute high earlier as well. So we'll see if there's anything within this. Now this is getting late in the day as well. Just FYI, this is about 1 p.m. Eastern. So essentially what we're looking for is we're looking for supply to fail, right? So that's what we want to see. We want to see the low fails, demand starts to hold, right? And then within this, is there anything that indicates that supply wants to give way and let demand take control? We have basically supply chain, reaction to demand. Demand starts to hold. This low fails here. So we can essentially say we've got supply there. We also have supply in here. All right, takes this low right here. Takes this low to get swept. And then we have the extreme of this much larger demand zone. I'm just going to cover just the low just because that's where the reaction is. And then let's see, supply reacts, it drops, hits this demand, then pushes up, it then fails, this fails, price pulls back into, would have been nice to trade from this candle right here, but it looks like price ends up just trading into the larger portion of this range. Go figure, again. Trades into this window of imbalance, right? So again, if you can spot the window of imbalance, what you want to do again is you want to basically just take this entire range, right? That's the idea. But this would be, actually it's not that big of a stop. It's only 2 pips. So right, so we have this, and we can say again, because we're just doing hindsight. We can say there's available opportunity, and what we would say is, you know, WIMB need to consider range, right? Right, we have the window of balance, consider the range, right? Price trades into it, we get in, we cover this low, right, of the demand chain, 2.8, we'll just do 3 pips, and then we are good. All right, and then what we'll do, because we're nearing the end of the day, we just look for 15-minute supply, which is this guy right here. And then you take this out here for about 5R, right? Again, super rangy Monday, not the best, but we'll go to the 1 minute, and we will just close out the day with these final trades and final markups. What you can actually see is this one that didn't get tagged earlier, right? I ended up giving this reaction. Pretty decent actually, but yeah. So we'll just mark that up as our spread hour reactions. Right, so again, not the best not the best trading conditions. So I'm going to put this in here. Well, actually, let me just go ahead and I'm just going to add it to the bottom of this. Okay, so now we're going to move on to Tuesday, right? So, but I'm going to speed through it quite a bit. So now what I'll do is I'm going to clear pretty much all this out. All right, so I want to mark up my 15-minute high, which is that guy, and my low, which is that guy. All right. So here's Tuesday. Now again, Tuesday we know likes to reset Monday's high, right? And that's exactly what it did. Took the high out, high or low, but in this case high. Took out the high and then dropped to the downside. So I know that we have the 4-hour demand zone here, which I can actually refine down to this 15-minute candle. If we look again from an EQ perspective, we can understand that price dipped into the premium, which is best for shorting, and then dropped to the downside.
Real shit, bro.
That was Tuesday. Tuesday was a pretty good day. There's quite a few trades. A lot of longs. Kind of that, not necessarily counter trend. I guess it'd be pro trend, because if we look at, this general price action here where price was trading kind of in a bullish trend for the day. Put the Asia range back on so I can see exactly where my days are. Yeah, in here. We could see that price was just trading higher over and over again. There's quite a few entries as price was kind of figuring out what it wanted to do into this 4-hour, 15-minute supply zone here. So yeah, there's a couple entries, and I'll try to play it back in real time in the video and just kind of overlay with music. But essentially what we had was, this one was a 15-minute risk entry where there was a 15-minute reaction to this supply zone here, and the formation of it was essentially what we'd look for in an entry. It just took a while to get back to it. And then, yeah, so we had the demand chain, the reaction to the supply, and then, yeah, this candle here sweeps this liquidity. And then, yeah, essentially, yeah, well, the reason that I'm considering that a sweep, and it could be potentially subjective or not great, but the idea is that we had price trading higher, this failed to trade higher, it came took all this and then immediately traded higher. So that's why I see it as a sweep. I'm sure on the lower time frame, seconds, it's a sweep. So reaction, demand chain, pulls up, came into this, and then goes from there. There wasn't much of a confirmation on this guy. There's potential shorts in here. This one wouldn't have gotten tagged. Comes back in, takes out this liquidity, and then that for me would tell me to take this trade off. I wouldn't necessarily trade that for that reason. And then we had this here where we got the sweep, we got the shift in order flow where we had this very slight reaction to supply. Maybe not exactly something worth trading from, but we can justify a demand chain from it. So we got the reaction to this supply here, which mitigated the demand. So when I got the first level of respect, right? So price came in, demand held, and then it gave us this bullish push to the upside, in which price then came down. You get the reaction. You can trade directly from this. And then here again, you get this reaction here, inside bar, price comes in, trades below it. And then again, that demand is now holding. So this high, this supply fails, price comes back in, you get your entry, and then same thing kind of here, right? Supply, price trickles up. Where's our reaction? That's our reaction. What's happening right here? Inside bar, what's this part of? Demand chain, right? And then that supply fails and then pulls back in, taps into this guy. Get a reaction here. This would have been our break-even level. Price would have taken us out for break-even right here, right? And then here again, supply, reaction, push to the upside, bullish momentum. We don't need a sweep in this flip because this here swept that liquidity. So the structural liquidity was taken out. And then again, what do we get here? Initial reaction. This here is kind of messy, but essentially part of a little bit of a demand chain. I think this is part of it as well. Right, so we have the demand chain setting up, reaction, price trades up above supply, this here, and this inside bar. Essentially, this candle mitigates something slightly smaller in there. And then, yeah, that's our POI. And then price trades up. Here again, we break even on this, break even on this. And then we have essentially that 4-hour, 15-minute POI, which is where we take profit. So 6, 12, or 12, yep. Break even, 8, and 8, right? And then here, this was our 15-minute supply, right? So we knew that from the higher time frames perspective, the 4-hour, we wanted to trade lower potentially. So now, whether or not we would take this trade here, I don't know. It's really aggressive, but it's there. It's valid. I marked it up. It's whatever. We got this demand reaction. Again, I had this marked up, I think, originally, but price stopped here and it didn't really react anywhere else. So I want to know why. And so that's why I considered this whole wick, this demand. Price reacted, price pushed up. And then price got swept after the demand failure. Price traded back into this guy here, right? So depending on how you had your stop loss, I typically don't trade under 2.5 pips. I try to keep it to 2. Sometimes it's a 2 pips. Sometimes it's mostly 2.5, 3, 3.5, something like that. But so yeah, I mean, the POI could have also essentially been this. However, if you did that, you did 3 pips, you definitely would have been safe. If you did 2.5, you would have been okay. If you did 2, you would have been out, right? So we'll keep it at 2.5. Yeah, and then that absolutely tanked. And then, yeah, there's no scale-ins until we got to this. This ended up being a catalyst for pullback. There's a couple opportunities in here, but the failures of the demand were super minimal. Just that wick. Same thing here, just that wick. So if you were comfortable taking the chain on this one, you could have taken this one. This one, it's there, but this is better because that's failed. We have a nicer chain, and then, yeah, kind of trickles from there. But here it was nice. We had a nice kind of supply control, demand reaction. Why is it reacting? To build liquidity. Sweeps this high, mitigates that chain, continues that chain along the way before failing here. And if we look at this, what you'll notice is that this range is actually a 15-minute POI right there, right? So these are some of the things that we want to look for when we're looking for scale-ins, is we want to find that demand reaction, because when it reacts like this, it's typically building a 15-minute POI. Then that gives me cause to trade this. I can break even here. This is my demand, 7.6R, right? Next day. So we'll kind of do the same thing here. I'm going to speed it up again.
New and fresh this morning?
Listen, man. Listen, man. Listen, man.
Myself 10 years from now. That's so far away it's almost impossible to imagine. Am I alone, or is there a wonderful person next to me? Well, knowing me, I'm sure you're causing all kinds of trouble for lots of different people. And now a big cheer from my heart. Let's go. Me. All right. Do your best. Do your best.
Essentially 2 losses here, but the reason we were longing is because we took Asia low, which happened right here, and then we took out this structural liquidity low right there as well, and then we started push to the upside, and then supply basically was just reacting and then failing, and demand was starting to take over. Now we had this supply range, right, which is what this reaction was. Thought it was just at first, but there's no reaction until here, which either way it doesn't matter if you took the range or if you took it here, the result is the same. We have that reaction, right? We can just say it's here, whatever. We have the reaction, this came, took out that low, and then popped up, and supply failed. So if you were to enter from this guy here, you would have potentially been okay, but this is the initial reaction within this. So you would have potentially entered like right there. You would have covered this low decently enough, and maybe you'd be okay, maybe not. If you did 3 pips, you'd be okay. If you did anything less, you'd be in trouble. But that's not exactly what I was doing here. I essentially waited for the floors, right? So we had the demand, the supply reaction, the demand, supply failure, demand held, and then supply reaction in here again, and then it supply failed, indicating for sure that price wanted to trade higher. So I went to trade off of this, and then price just wicked straight through, and we took a loss. And then we had this, which was a sweep of this liquidity and then continued higher prices. So now this became the POI. Now it's a little bit bigger of a POI. I think in reality, I would have taken just the wick here on a live trade. But for the sake of video and whatever, I took the whole candle, and then at a 4 pip stop is the only way I'd stay in this. If I did 3, I'd be in trouble. But I mean, in reality, you'd want to cover this low with a decent amount, but it'd have to be 4 pips. If it was just the wick, which would be more realistic to live trading, it would be like this, and I could get away with 3 pips easily, right? So this one, whatever, we can just consider it a loss, or maybe it's winner, whatever. We'll just call it a winner. Take it to this high right here. And 13 pips, or potentially just a loss. Right, so would have started off potentially rough. Looked for a scale in here, nothing. We hit this 15-minute kind of. Actually, you know what? If we go back to the 15, there's nothing here for me, right? I wasn't looking at this at all. I was just kind of justifying why this reacted here. So these entries here are just for this fact that it reacted and dropped. I don't think I would have traded this at all in a live market. It's just, yeah, so just, you know, take that with a grain of salt. But what you'll notice, just for the sake of the entry, we had demand reactions, supply chain, and then ultimately that like main demand failure right here. This failed with this wick, which again just changed, so you could have entered here, you would have broken even. This is a little bit more committed break, and then it just tapped back into this overall larger chain, and then it just break even here and just died off. Price actually came back to mitigate this before mitigating this demand, right? So depending on how you broke this even, I mean, hopefully you wouldn't run 14R and not partial it at least. My break even's here, yes, my full TP would have been here, but as soon as I started seeing like some of this like price action to the upside, I'm sure I would have taken some like inefficient like partial like up here or something like this, not necessarily here, but you know, just keep that in mind. And then price, right, we get the reaction. Don't know if I'd necessarily trade off of it immediately, but what you get here is you get demand reaction. There's this very, very tiny window of imbalance in here. So that's indication again to trade the range like such. And then yeah, get in here, cover the high, 3.3, 3.5 pip stop. And you can take this down to the bottom to the actual demand for 7R. And then price came right back into this area here, which was basically just a demand reaction with supply control. I don't have it marked up. And then this little bit gets swept right there, and then price comes back into that POI and then trades lower, but we must have had news that day, so I'm pretty sure I would have stayed out of this anyway. And then yeah, and then I know some people took this long at the end, so yeah, there's that. So let's go ahead and get to, I gotta screenshot this stuff, I think. Hold on. All right, guys, here's Thursday. Thursday, pretty tame. Some decent setups, but pretty tame overall. We have price hit supply. There's no real setup for me here. The demand is basically this for me. There's this kind of buy to sell wicks. You get a reaction in here, and then the reaction gets swept and price trades higher, but it doesn't. I don't know. I guess it takes this low, but for me, it's a little too aggressive. I don't necessarily like it. We definitely get bearish order flow and we get failures to take the high, but I don't know. I saw this reaction here and then this little inside bar, which kind of let price halt and build the supply chain, and then it dropped lower. This just ended up being catalyst for a pullback. And then price traded off the reaction right here. We got the break even. We took out Asia lows right here, equal lows as well. So it's, you know, pretty, what's the right word? there's a high probability that we'll get a deep correction or a deep pullback. So we partial out there, and then we let the rest run and get about 7R off of that. Price took out the Asia low and it pushed bullish for a moment. And there was a potential entry here. I don't know if I would have taken it personally. It makes sense too. It's just in a live market. I don't think I would have taken it, but it's an opportunity nonetheless. So we'll probably mark this up as this. And then, yeah, and then price trades higher. It doesn't quite hit the 15-minute POI, so I'm not really sure what that would have looked like in a live market for management. Probably some mismanagement there on my part for sure. But after this huge bullish push and taking out this high here, and then this massive retrace back, yeah, I don't know. Obviously, I think that's news again, so we'd have to play it cautiously. There's no real demand in this except for this piece right here. Again, this is window of imbalance, so I'm considering this range here. And then we get that reaction right there, which again, what's it react to? Literally just the window of imbalance. And then, yeah, price trades higher. And then we get that kind of push to the downside. There were some opportunities within this to trade short. We had demand reactions and then demand failures while supply kind of held the highs. So it's all substructure. So whether or not you would take that or not, it's totally up to you. Personally speaking, I do tend to take those sometimes because I understand that substructure, depending on the POI that it's tapped into, can be very telling and it could be a good entry. So, there's definitely opportunity for that. However, the safe entry based on, again, this is our initial reaction to that demand. This is that supply chain that was built. This was the last part of that supply chain that was left unmitigated. And then we had that confirmation of the demand failing right there. And then price traded up, traded back into it, 3.2 pips stop just to cover the highs, and then back right into the demand for about 9R, right? So it's Thursday. So we'll go ahead and skip over to Friday now. 15.
Just a dream.
Yeah, but it still hurts. Oh, yes, the past can hurt. But the way I see it, you can either run from it or learn from it.
All right, Friday PA. Looks like we had one opportunity, really strong opportunity here on this short. The long was a counter trend short or long after taking out basically daily demand, right? So it's major structural liquidity. Friday PA, we ended up again corrective as usual, and price came through, took out that liquidity, and then popped up pretty aggressively. So price close really bearish. 20 pips. All right, so yeah, so Friday, yeah, so we had a potential opportunity, but it was like basically in Asia, so not really counting it. Price didn't quite make it back to supply. It looks like what it did was probably come to the EQ line. Yeah, just came to EQ, built a little EQ liquidity, and then ended up dropping. So go to the 1 minute. briefly. And yeah, so we basically had price come and like take this high as liquidity. We had, I mean, I probably would have longed this coming off this demand, but in reality, picking out this demand here was a bit far-fetched. This was like basically from this other side of the range here. So I don't know if I necessarily would have even seen it. I don't know. But yeah, so that's why price went long here. I just went over there to justify what was happening, to see if there was any opportunity to go along there, and that would be it for me, waiting for the supply to fail, essentially. We then had this where we took out this high, and then we gave demand reaction here, and then price came and actually swept that reaction right there. And then after it got swept, price then just continued to trickle to the downside. It's not the best piece of PA because it's very bullish here, and that's our demand reaction. And there's, generally speaking, like price tend to remain bearish. Now if we look at this from this high to this low to this high, what you notice is the same thing as always, right? When you have a range like this, the liquidity is built at the EQ. So everything within this, right, was just building liquidity. So you might think price is trading higher from here because of this bullish price action. In reality, all it did was it pop up, rip back down, built these highs right here, equal highs, and then just built more liquidity to the downside in ways of like demand chains and liquidity. And then yeah, price just ended up targeting it because overall price action was bearish, and this just ended up being catalyst for pullback, which in hindsight is obvious. But yeah, so this was reaction. That was a sweep. This here, these little buy sell wicks, that's part of our supply chain. So obviously, again, justifying why did price just stop here all of a sudden, is for that reason. And then we have this liquidity. Price came up, built all this liquidity for targeting, came back in here, wick just above this level, but 2.5 pips would have kept you in, 2 pips would have kept you in as well. And then yeah, break evens down here or at 1 to 4, whatever you feel comfortable with the break even. That's kind of far away. And then yeah, the daily 4-hour 15-minute extreme right here, price took it out, 20-hour there, 19-hour, excuse me. And then price came back aggressively back to the upside. We have some supply along the way here. We got some reactions, but price never quite made it back down. There was a potential entry here where we had this supply, and then we had the reaction to that supply. We had a bit of a demand chain sweep of these equal lows, these 2 candles, and then price came right back in here, but a little aggressive, so I wouldn't have taken that, but it's an opportunity. And then we have this range, right? Again, I thought about marking up this, but my reaction is up here, which again is probably totally fine. But why did this happen here? It's because of the range, right? So if we do just this, we can say, all right, that's the reaction or the flip. There's no sweep of liquidity. So I anticipated sweeping, and my POI just below that would be this one, right? So you can trade it from there. If you wanted to, you could wait for this to hold and then continue higher. You can see this sort of holds, but it actually wicks just above this. Actually, no, it does hold. Sorry, it holds. And then price trades back into this. That supply fails, and then this ends up holding here. So a couple opportunities to get in long here. This would have been towards the end of the day, so hold it to whatever. Maybe just these highs right here. All right, cool. This video is really long. It's 2 hours, so I need to cut some of it out. I'll probably speed up some of the actual marking up as I'm doing, just overlay some music and cut back in as I do the actual commentary like I'm doing now at the end. But yeah, these are my end of day markups for the week. Again, this is sort of rushed, sort of not like super whatever accurate, because what I'd be doing is I'd be doing it every single day. I'd be doing it during the day, and I'd be doing it like just adding it in. This was for the video, and I had to do the entire week, and I didn't want to be here forever doing it, and I had to kind of describe stuff. So I definitely missed some trades. Some of the trades that I took are not the best, but generally speaking, this is what we're looking for. Same model, looking for major points of liquidity through structure, catalyst for pullbacks, understanding that EQs are just liquidity. So be very careful with the range and how price moves within the middle of that range. try to trade from the extremes or from the flips near the extremes, and anything else in the middle just use for continuation or just avoid it altogether if you want. But generally speaking, yeah, this is how I do my end of day markups and how I recommend that you guys do it too, whether you're still learning or you're rather tenured and you're doing well and being consistent. Yeah, this is definitely something you want to do. But I hope that you guys have a great weekend, and yeah, looking forward to the week coming up and all the things that Phantom has in store. Quick reminder, we do have the Phantom Masterclass coming up on the 23rd of April. It's a 2-day, 6 hours a day, 12-hour just deep dive into all of these strategies and then some. And it's taught by the two founders, Brad Wise and Kevin, and then we have Aaron and Alex Tricky and myself. And yeah, we'll cover quite a bit of information. And yeah, I hope you guys can join. And seats are closing up. We only have a handful left, but want to fill them up before we get to the end of this. And yeah, I hope you guys have a good weekend. I will talk to you guys some other time, I guess. Even though I don't want to. Some of you guys are weird. Some of you guys say some weird shit to me in my DMs. You gotta stop. It's creepy. Okay? You know who you are. You know who you are.